Welcome to my weekly review. Today is Saturday, June 22. I believe it's the second day of summer. Probably pretty warm where you're at. And it's summertime, it should be warm. And the Nasdaq has been warm. This is a daily chart of the Nasdaq. And we had a low made here on April 19th of 15,222. It ran up 18%. And Thursday, last week was a weird week, wasn't it? I mean, with having a holiday in the middle of the week, in the first 2 days, the Nasdaq was up. And then Thursday and Friday, it did the reversal, went the other way. It made a high of 17,936. And my point is, this is an 18% move, which is a pretty strong rally. I don't believe it's done. A lot of people, expect it to go lower in the next week or so after this candle here, and it probably will. I mean, it's gotten a little bit ahead of itself. It was 8% above the 50. If you take a look there, right now it's 6.7% as it closed on Friday. But earlier in the week, it got up to 8% above the more than 8% above its 50. And we know that it comes back to these moving averages. And I know that the green line here is the 10, the magenta is the 21, and they're rising rapidly. So even if it just trades sideways, these moving averages are going to catch up with the index. So my expectation for next week would be more volatility. We have the options expiration on Friday, and this next Friday is the end of the second quarter, which will be rebalancing the indexes, and fund managers are going to have to own some of these winning stocks. If you're a growth manager and you don't own Nvidia and you're underperforming the market, you're going to get fired, or you should get fired, because it's just been too easy. Anyway, I want to take a look at the weekly chart. Yeah, it was up flat on the week, 2 days up, 2 days down, ended up flat. But on the month, the Nasdaq is up 5.7%, 954 points. So if it gave back some, was up only 4% instead of 5.7 next week, that would not be the end of the world. That's kind of what I expect. You have to have expectations, but this market has been so damn strong that it wouldn't surprise me if it just continued higher above the 18,000 level, which it'll eventually get to. I'm of the camp that the AI revolution just started. The bull market's got legs for sustainability. We're seeing a lot of rotation in the market, which is healthy and allows the indexes to trade higher longer. And we did see some selling in some of these semiconductor and hardware names at the end of the week last week. All right, I am going to get to stocks because I don't trade the indexes. I don't care about the Dow or, eventually the Russell 2000 will participate, I think, but it just kind of goes sideways. Well, since I'm talking about it, I might as well just show it. Russell 2000 has done nothing, I mean, for years, right? I mean, really hasn't done a whole lot. Just kind of going sideways, forming a base, had a little bit of a rally last year and just kind of gone sideways this year. So nothing to get excited about there with the Russell. And I'm going to move on because I did mention Nvidia. Nvidia last week, they had a down week. It was down 4%, as you can see there. And it had a 48% move from the breakout. I'm going to go to the daily chart, even though this is a weekly review. Thank you for tuning into my weekly review. And if you got it, back here at the beginning of the year, around 50, was 500, but $50, and then held it for the run up and just held through the base. And now it's up, what, 126 from 50? Okay. You made a pretty nice chunk of change. But this move here from the breakout, this is up like 45%. And it just pulled back to its 10 EMA. And that's what we saw, with the index, the big run up and then the pullback. And I'm seeing a lot of stocks here that just pulled back to the 10 EMA. And I don't buy pullbacks. I want to buy the bounce. I want to see where it bounces. Is it going to bounce off the 10? I don't know. Is it going to come down to the 21? Maybe. But I'm not interested until this thing decides to bounce. I mean, it could come all the way back to the 50 and still be fine. But yeah, it's got to bounce. I don't buy dips. I buy bounces. So Nvidia had a nice, strong run, and for it to give some back is kind of normal, right? Right now, it's 10% off of its highs. And to me, it's not actionable or buyable at all. But you look at this earnings line, it's heading just due north. And that's, what And we've never seen a $3 trillion market cap stock deliver triple-digit earnings growth for quarter after quarter after quarter. And so we've never seen anything like this. This is a phenomenal company. I think they're going to continue to deliver strong earnings, certainly not triple digit, but strong earnings growth is what drives stocks. And Apple doesn't have it. Apple, can't even call this a growth company anymore. They ought to, increase their dividend and become a value play. But anyway, the stock looks fine. It broke out of a base here after the developers conference, ran up to 220, and now it's pulling back to its 10, just like we saw with Nvidia. The pull back to the 10, you're going to see a lot of charts looking like this. And, so the index is pulling back, the Nasdaq, and so are these leading stocks. Where they find support, we just got to wait and watch. I'm not Nostradamus. I'm not going to make any bold predictions. I'll just interpret it day by day. And to me, if it comes back to that old buy point, we've seen a lot of stocks do that, then I'd be more interested. But right now, it's still, it's extended and it's coming down. And yeah, it might find support at the 10 and bounce, but it might not. We'll just take it one day at a time. Once again, its earnings line is just, kind of chopping sideways. Big week the prior week. And, it's had a nearly an 8% gain and gave back 2 last week. Not bad. It's only 6% off of its 52-week high or all-time high. All right, that's Apple and Nvidia, and I got to go to Microsoft because these big three, with the index rebalancing, I think you have to have these ones on your books, right? This is Microsoft. It's got a little better growth than Apple, certainly nothing like Nvidia. And these are the top 3 stocks, over 3 trillion market cap. This one I kind of like, it's still near a base, still actionable. Got a little extended last week, pulled back on Tuesday and Thursday, and then had a nice day on Friday, perhaps part of the options expiration or part of the window dressing and rebalancing. But anyway, you can see this consolidation, flat base pattern for 8 weeks, and now it's moved out of that area. But still, it's relatively is safe, actionable to buy. 2% over its 10 EMA is not extremely extended right there. All right, a couple other ones that I like in this mega cap group is Amazon. You could see pretty clear, easy to see this flat base consolidation here, trading tight within the base. And then Thursday and Friday popped while the index was trading lower. This one was trading higher. It was up 1.8% on Thursday and 1.6% on Friday. So nice move for Amazon. I still think that's actionable. I like the action in Amazon. It's a weekly chart. I mean, it's a weekly review. So I'm going to look at the weekly chart, and there you go. The earnings line heading due north and the stock price heading due north. And we've never seen companies like Amazon and Meta and Tesla and Google spend with this CapEx spending. They're spending a ton of money, and they're going to get return on their investments. These people are not stupid people. They're spending the money because they know they're going to, spend now and then make the money later on the back end. This is a Meta Platforms. You can see the cup with handle pattern. It sold off following X earnings report, and all it did is form a base here. I like it above 500. It's really having trouble. You can see here the last couple of weeks having trouble at 500. But once it breaks above that, I think it's got some clear skies ahead of us. Of course, the old 531.49 is the high. I'm not going to wait for it to get there. I'm just going to have faith that it will, handle out here and then eventually break out. They have earnings July 24th. Yeah, July starts a new, Q3 earnings cycle, and looking forward to that. These companies, they, like I said, they're spending a lot of money. We've never seen anything like this, and they're going to get return on their investment. This is Google. I like the chart set up here, kind of a flat base pattern. Let's see what it looks like on the weekly. Is that 5 weeks? It looks like it had a 3 weeks tied in there. Yeah, so the end of this week, the high was what, 176? Just trading sideways for 3, 4, 5, 6 weeks here, and it looks like it's starting to break out here. Last week it was up 1.6%, but you can see it's right at its high. Yeah, Google looks fantastic. Trying to break above that 180 level. All right, that's it for the mega cap tech stocks. I am going to move on. And I'm going to start with the negative stuff because there's a lot of negative out there, and then, bring you back on the positive path. I just have to go to these crypto stocks because they're not performing at all. MicroStrategy, this one is one of the big winners in 2024, and you can see it's formed this cup with handle pattern, but just it's trending lower. The short-term moving averages now are curling lower, and it's traded down to its 50. Got a little pop on Friday of 1.25%, but the digital currency markets have been slumping, and these stocks are just playing right along with it. Pretty tough to trade these right now. Coinbase, same thing, very similar look, cup with handle. This one is below the 50 though, so I don't like to see that, but it could definitely rally, back through that area in that 263, paint by numbers buy point there. But coin looks good. It's in a base. This is what you want to see. You can see it's a later stage base here, but which are more prone to fail, but we'll see what Coinbase does here. In the next coming couple of weeks, it looks like it could just fall out and, sell off, or it could break out. We'll have to wait and see. And the other one is Mara, the miner. This one just trading sideways. There's nothing to do here. I mean, it has no power to go up, but the shorts can't push it any lower, and it's just kind of trading sideways. So pretty bad action in the cryptocurrency stocks. Another group that was doing well for a long time and is now fallen on hard times is the solar group, man. This is NVDA trying to emerge from this stage 1 base and just got up to that old buy area and just sold off hard with the last 6 days with volume. That looks terrible. Here on the weekly, you can see the earnings is trending lower, consolidating in that base, and then last week was down 14.5%. That's a rough week for NVDA. The solar stocks are looking like, stay away from them, right? Solar Edge, another one that just, geez, this looks like the software names in 2022. But you can see the earnings line going, south, and so is the stock. Only a 17% loser last week, which is accelerating losses on top of losses in stocks like this. Very tough trade. And then MAXN is another one that just, you can see the earnings line in the stock is just, following along. Those ones are horrible. Oh, wow, this is only $1 stock now. I remember it was like $30 and people were looking at it. Anyway, the two that I kind of like in this group are Next Tracker. It was down 7.5% last week. Still kind of set up in a base here, but man, that looks rough. Traded below its 21. Big volume on the Friday, options expiration Friday. And then First Solar is a leader of the group. It just pulled back to its 21, but and looking kind of ragged here too. The earnings line is going due north. The same with the NXT, but man, these stocks are just tough. Yeah, the NXT's got a nice earnings line there. All right, enough with the bad stuff. All right, let's get to some of the good stuff. Ooh, I got one more. Wait a minute, I do have one more. Some of the eating I've been mentioned recently about. This is Yum China. This one's obviously having a hard time. And then Jack in the Box. There's been changes in the way people dine out, and Jack in the Box is one, Starbucks is another. I mentioned this one the last few weeks, in a clear downtrend. These dining names, and also the consumer, the apparel, retail apparel. This is the old Michael Kors. This one's really fallen on hard times. You can see the earnings line heading due north. So Vera Bradley is another one, just having a hard time. I believe it made a new 52-week low on Friday. She's Lululemon, mentioned this one, looks terrible. And then Nike, of course. So there's been a change in the consumer, right? So what are they buying? Well, if we go to the diners, Bros is definitely taking market share from Starbucks. This stock, got to go to the weekly chart here, and you can see the earnings line heading north, and the stock is following along, just breaking out. To me, this is still on an IPO base. And it's going to take time for this one to really, you know, a couple more quarters worth of earnings to really get moving here. August 7th is the next earnings report, so that's coming up. And Bros is definitely taking share. CAVA is another one. You know, still, you know, just broke out of that little IPO base, out of the due diligence phase, and into the advanced phase, and it sure is advancing here. This is like a you know, breakout, and then return to the buy area, and then now boom, head due north, only 5% off of its high. CAVA looks good as well. So you got to notice these changes, you know, in the market, and with the consumer. ELF is another one that is, you know, if you just take a look at the weekly chart, or, you know, lower left to upper right, there's not much to know here, right? They're taking market share. The stock is being bought. The company is being rewarded. Yeah, it was down. It made a nice run on Monday and Tuesday. It was down Thursday and Friday in the shortened week, or the holiday shortened week. It was up essentially 7%, and 7% off its high there. So still forming this base here, and still, I think, actionable for ELF. Definitely taking share. Another one is Deckers, which has fallen on hard times here recently. This one is pulled back below its 21 EMA, and cause for concern because it took out the low of the gap day, which I don't like to see, which was 994.50. So it's well below it right now. Might have a date with that 50 SMA. Decker's definitely taking share, but the stock is starting to show cracks. And then CROX is another one that I like. You know, it had this buy point there at 148.79, and it broke out. You know, pull back here, broke out, and then pull back again. So it gave you the, you know, pull back to the 21. Second mouse gets the cheese, and it ramped higher. Sold off the last couple of days down to its 21. We've seen a lot of that last couple of days. Anyway, that's it for those retail names. Retail is really hit and miss right now. I've got to get to the data storage group. This is MU. I mean, we had this on our ready list a couple times way back here, and then certainly during this current base here where it pulled back. Nice cup with handle, shakeout down to 121, and that was the trade, 121 to like 156. Made a new high like the index on Thursday, then reversed lower, traded down to the 21. So that looks a lot like the Nasdaq, and like Nvidia, and like a lot of stocks that we're looking at this weekend. But they report earnings on the 26th, which is Wednesday, I believe. Today's 22nd. If I do the math, Wednesday. And, you know, if you just look at their weekly chart, this is a cyclical business. I listened to, you know, the Pure Storage analyst day with Charlie, talking about how they're, you know, taking share, and they're retaining business, and business is just coming to them left and right. Really, business is booming here, and I'm sure Micron's going to report a strong quarter. You can see the rebound here in this business cycle. I don't know how the stock's going to react, and we've seen some wonky moves here after strong earnings reports, but I think they're going to have a strong report, accelerating, you know, sales and earnings growth, and I think the stock will eventually, you know, trade higher after, you know, more quarters of, you know, strong sales and earnings growth. But for right now, I mean, this is why time frames matter, right? If you're in it for, you know, a day trade or a swing trade, you know, you got to get out of there before earnings. If you're just a long-term holder who got it back here, then you're just, you know, this is just a blip on the radar, and you're looking at more longer term, you know, charts, and don't really care. You know, Micron is a cyclical business. You can see how it goes down, it goes up, it goes now, and now we're, you know, in an uptrend, and eventually, like I say, if they continue to deliver the strong sales and earnings growth, the stock price will reflect that. Pure Storage, this one I talked about, Charlie Giancarlo. This one was on our ready list a few weeks ago. It broke out, got extended. This is the earnings day when it pulled back following, you know, good earnings report. But, you know, it's priced in, you know, buy the rumor, sell the news, pull back to the moving average, ramped up in the, you know, the last 2 days, you know, like I said, made a new high, then pulled back to the 21. Very common, seeing a lot of charts looking like this this weekend. Seagate, this is, I believe, a stronger one because this one made the high on Tuesday, pulled off on Thursday, and all it did was pull back to the 10. And it, looks like it might find support there. We're gonna have to wait and see next week. We'll have to wait and see next week. Seagate is definitely stronger than some of these other ones. Western Digital, same thing, made that high on Tuesday, reversed, and then Thursday and Friday sold off and closed below its 21 here on the daily chart, just a tick below the 21. Hopefully it'll find support there and start to stabilize and trade higher. But these data storage stocks, they kind of look the same, where the earnings are going down and now they're popping back up. So I expect them to deliver strong earnings. I don't think the cycle is just going to have one quarter and then they're going to fall apart. That doesn't make sense to me. Anyway, okay, I got to go to NTAP, NTAP, NetApp. Another one we had on our ready list broke out, and it's just surfing its moving averages. Made that new high on Thursday. Sound familiar? Then reversed 130.87, pulled back to its 10, and stabilized on Friday. We'll have to wait and see what it does next week, though. All right, couple more names that I've got to get to is DELL, which sold off following its earnings report, kind of squatted at the 50, and then last week broke higher, made not a new high, but it did ramp. The high is 179.70. But for since its sell-off, it made a high here of 161.52, sold off on Thursday, pulled back to the 10 on Fridays, so that's kind of doing what the index is doing, and that's to be expected. SMCI, kind of like this one a little better than DELL right now. It's more of a pure play on the data centers, and this one is looking pretty good, just consolidating in a base here. I wouldn't count it out with this triple-digit sales and earnings growth. Yeah, I know it made a new high, and it's a late-stage base, and blah, blah, blah. But to me, it's just consolidating in a base. And if it continues to deliver sales and earnings growth, see, this is where, time frames matter. And if you're in it for the long haul and they continue to deliver strong sales and earnings growth, I think the CEO said 25 billion in revenue is possible. All things go right. This stock's going to go higher if they manage to pull that off. But for right now, just consolidating. I kind of like it, above 920. Again, it made that move up to over 1,000 on Thursday, reversed lower. I think there was more than 100-point spread there. Yeah, the high was 1,014, the low was 900, 114 points in a day, and then traded lower on Friday, 1.3%, but down to its moving average. And if you look here, the shorter term moving averages are trading above the longer term moving average. So this is starting to trend in the right direction. All right. Anyway, that's it for me. Thank you for watching my weekly review. This week is the last week of Q2, so there's going to be some volatility, some window dressing, some index rebalancing, and it promises to be, volatile and exciting. I want to go back to Nvidia for one, because this is the most important stock in the market right now. I just wanted to point out one thing on Nvidia that I skipped earlier. Yeah, it made a high of 140.76 on Thursday, sold off Thursday and Friday, just like the index pulled back. But what it did, it filled this gap here at 126.88 when it gapped up on Friday the 13th. No, it wasn't Friday the 13th, Marty. Come on, get it together. It gapped up higher, and the low was 127.16. See that gap there, 126.88. So on Friday, it did fill that gap. So something positive from this pullback. So I don't know if it's going to stabilize there at the 10 and trade higher, but it did fill a gap. And like I said, that's it for me. Thank you for watching. Except for I did lie. I have one more thing. There's I just wanted to point out some of the strength in the drugs and the medical stocks, the healthcare cohort. They're starting to show strength. So there's just been a rotation in the market. We saw, the miners do well. We saw the energy do well earlier. We saw the semiconductors, and now it wouldn't surprise me if we saw medical products, healthcare, and drug stocks do well. I mean, obviously, Lilly's had a nice run, made a new high on Thursday of 905, pulled back on Friday, pulled back Thursday to its 10, and then just had an inside day on Friday. There's a conference at diabetic ADA conference. It's going on now, actually, this weekend, and I think Lilly is due to report some sort of data here, so we'll have to wait and see how this thing responds next week. But you can see on the weekly chart, lower left to upper right, this thing is a monster, and looks like it's headed for a $1 trillion market cap. The first drug stock, it's at 840 billion right now, so it's not that much of a stretch to see it trade there, in the coming months, quarters, and years. It'll eventually get there, and of course, Novo is its cohort and a weight loss drug, which will be the largest selling drug in the history. Novo is just setting up in a base here. It looks to me more actionable than Lilly. It's not quite as large, 640. For some reason, they have similar growth numbers, but Novo's got 200 billion smaller market cap. It's an ADR, so it's not bought as much by U.S. funds, and it's limited by how many the funds in Denmark can only buy like 10% of it, but definitely the largest company in Denmark, and setting up in a base here. It had the 3 weeks tights pattern, and they're at this conference too, and they're going to deliver some data. So I would expect some fireworks next week from Lilly and Novo, and Dexcom is there as well, since we're mentioning this diabetes conference. You could see Dexcom's earnings have been going straight up, but it's just consolidating in a base here. This thing has a 3 weeks tight area as well, so these stocks are trading tight. I like tight, but I would like to see it above the 50 and trading tight. All right, another one is a drug stock, is Vertex. They're at this conference as well, and this thing is just a monster. If you just look at the monthly chart, and I know, that past performance doesn't guarantee future results, but this is a well-run company with a broad portfolio, and it broke out of a base recently, now pulled back the last couple of weeks. To me, it still looks actionable here, right at the 21, pull back to the 21. That one is kind of hard to trade. Merck is another one that's doing well, setting up in a base, trading tight within the base. When the index was selling off the last couple of days, this one was trading higher. So I definitely take note of that, with volume. So that's another one that looks good. REGN, Regeneron, another drug stock, broke out of a base, trading higher. A little extended here at 2.2%. Not too bad, actually, huh? Just getting away a little bit from that base. And I should have got it when it was at 3 weeks tight area, but last 3 weeks it's moved and trading at all-time highs. So you got to like that. Boston Scientific, believe they bought a company last week. This thing just broke out and it's surfing its moving averages. Kelly Slater stock made a new high. What's not to like, right? Earnings going due north, stock going due north, and you can see, along the way, it's had quite a few of these 3 weeks tight areas. So it trades tight, but gradually moves higher. And right now it's at 3 weeks tight, so that might induce some buyers. And the last one is Intuitive Surgical, with their Da Vinci machines. We had this one on our ready list. It broke out. Now it's extended, but more people are having elective surgeries, post-COVID. You can see the earnings line heading north, the stock heading north. And it looks fantastic. That's it for me. I'm seeing a lot of other stocks setting up in bases. I'm not going to share with them now, but I will have some new setups here on Monday morning, to me, that look pretty good, that are in different groups and what we've been trading. So you're going to have to keep an open mind, be flexible, and never give up. Thank you for watching.